following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from OptionPit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Grigas from Options Express.
Welcome back to the Option Block, and we have a lot of interesting stuff on the docket for you today, including all the different topics we're going to hit on in our various segments. Our rotating Options Express chair is filled today by one of our old favorites, Rob. Rob is coming back to the show. How you doing today, Rob?
I'm doing good. How are you?
Not too bad, but we like having you and Tim filling in because you bring some flavor to the show.
He's handling all the call volume from all the people calling OX now.
Yeah, exactly. Everyone's calling looking for Tim and Rob because they're the big superstars now. I won't say what flavor you bring, but I'll leave
I'd like some flavor with my trading. Is Rob available?
So with that, we will dive right into the trading block.
The trading block.
And it's another mixed day on the street today. The market started off relatively strong, and we saw the markets were down a bit to midday, and then they finished up around unchanged, a little bit up. S&P up about a handle, Dow up about 6 points, the VIX cash also up about nearly a point, about 0.78. Getting back to that old conversation we've had about using the VIX as a hedge. These are the days when maybe the VIX isn't performing exactly as you may want it to if you're looking for the VIX as a pure hedge. In terms of the broad market, everyone seems to be fixated on this QE2, and not the ship, but the Fed's quantitative easing program. Everyone's debating exactly how much that is going to be and what the impact that's going to have on long-term rates as well as short-term rates in the yield curve. And so everything is pretty much in flux, it seems like, until that stuff is sorted out with the Fed shooting large amounts of capital back into the economy. That's obviously going to have a big impact, equal to, if not more important than what we see coming up tomorrow, actually. Tomorrow. Hard to believe tomorrow is election day. It finally all comes to a head tomorrow. Interesting stuff at play in the market today. What are you guys fixating on right now?
Well, the interesting thing for me is how little the market seems to be caring about what's going on this week. SPY closed around 118.53 today, and the 118, 119 strangles barely trading $2, okay, in the weeklies. So they're saying that despite an election, bunch of manufacturing data this week, QE2 up in the air, and a non-farm payroll report, that we're not moving more than $2 in the SPY this week. That is just astounding to me. I think it's absolutely fascinating that the market can just look this in the face and say it does not matter. This matters little to nothing. And it's been I've been really surprised. Now, I wasn't expecting things to get blown up, but I was expecting a little more pop in my volatility, and I'm not seeing it. We're getting a little bit of increase in the curve, a slight little notch in the at the monies, but really, I'm not seeing anything that says anybody gives a rat about anything going on this week. The strangle's 20 cents more than it was last month. It's like nothing.
Why should anyone care about, the world's most powerful democracy changing hands in a day? Why should anyone be concerned about what?
Apparently nobody does, because they're going with the old sell the preem and live the dream, I guess, huh?
Apparently no one is truly concerned about a major surprise or major event unfolding tomorrow.
It sounds like gridlock is just basically priced into the market already.
I think you hit the nail on the head right there. It's one to where we've had the market rally as it has for these past few weeks. I think you're absolutely right. It's all priced in at this point.
Yep.
Bunch of crazy cynics out there. They want everyone at loggerhead so nothing can get done. In our bi-weekly commodity update, there's a lot going on in oil and gold, and I know, Mr. Tusaw, you are knee-deep in both of those right now. In fact, I can see you're covered in Texas tea as we speak. So you must have been doing some prospecting on your lunch hour out there. Give us an update on what's happening in the oil and gold sectors today.
Well, when you say knee-deep in oil, I have a 1-year-old that's still in diapers right now, so I don't know if that's really an appropriate thought for me right now. But anyway.
Not too much of a market, I don't think, for soiled diapers right now. If there were, my little guy's got the flu right now, too, so I would be eagerly dumping them onto the market alongside of you.
Hey, let's start up a new exchange. Me and you. Well, you'll go, but you gotta be you gotta go long. I'm not going long on that though.
There's got to be some emerging market out there that really wants potent fertilizer in massive quantities, because we could hit them up pretty easily.
That's all a bunch of crap, if you ask me. But I'm looking at oil today. It's one where we're up a little bit on oil. We had the dollar down a little bit, and it just keeps flirting with this 85 level over the course of the last month, and it keeps channeling between the 80 and the 85 level approximately. And I'm curious to see if we get another run up to 85 over this next week or so, if the 85 level holds again. So that's kind of a key number that we're looking at on oil. Silver was pretty flat today, not a lot of movement there. Gold had a little bit of a pullback, and it's one to where I'm still long-term bullish on a lot of commodities in a hedged setting, so to speak. And with gold, I think that's just over the long haul, I'm definitely bullish on it, but I think it's just kind of a blip in the screen, so to speak, for today.
Since you're such an oil buff, let me ask you this. There's a lot of debate these days, and I'm not an oil maven. I just dabble in it every now and then. So then a lot of people who trade oil on a regular basis debate whether what we saw back in the end of 2008, beginning of 2009, with oil prices hitting up to, north of $150 a barrel, and then the market subsequent meltdown. Of course, obviously there were other factors in mind that kind of chopped the knees out of the market. But a lot of people think that maybe that showed that there was also a ceiling to how high oil can go. If you get much north of $150, $160 a barrel, if gas gets much north of $4.50 a gallon, it'll bring the economy to a screeching halt again. Do you subscribe to that notion, or is that just nonsense?
I don't know if it's nonsense, but I mean, it's like, I believe it was President Carter back in the 70s had thought that if gas went up to a certain price, Americans would just stop driving, and that was not the case. So, with that, people were still driving when oil was at $147 a barrel, back in the time frame with which you described. Now, with that, is that what brought down the economy? I think that's one of several factors that did, besides deception in the loan industry, but that's a whole nother show. But
I think they were all interrelated there.
Yeah, I think it was.
And
I think that was the culmination of the free money era. I think that was just more than an oil bubble, was a liquidity bubble.
I would say that the oil prices was kind of like the poop cherry on top of what was a disgusting heap of gross, melty nastiness that was kind of the culmination of what was happening at the beginning of 2008. So, but you do see certain people. Well, as incomes rise, oil can go higher than 150, 160, right? The problem is that we haven't had incomes rise in 10 years. In real terms, your average Americans, they're not making a lot more than they were 10 years ago. And so right now, I do think that there is kind of a halt where people start carpooling. People do increase their public transportation usage. I remember something about that 4th of July weekend. There was the staycation became the popular term during that July period, and if this economy gets itself turned around and people start really making money again, then oil can go to 200, 250, 300. Nobody's going to care. If you're making $250,000 a year, you can afford $5-6 a gallon. Okay? If you're making, $40,000 a year, you can't. And I think that's kind of what we're seeing.
Of course, if oil heads up north that range again, then you have to have some serious income growth to offset the energy inflation and everything else we're going to be seeing. I mean, everything. Your loaf of bread at the store, your gallon of milk, that stuff's all going up too. So it's going to be hard to see some real income growth with oil north of that area. Anyway, I just wanted to throw that little thought exercise out there. I know I've had a lot of debates on that subject with some guys I know who are hardcore oil guys, and I was curious how you guys thought on that one. With that heated debate about fossil fuels and, of course, gold, we will dive right into the Odd Block.
The Odd Block.
And today's Odd Block is going to be more quick hits. Highlights, if you will. There's not that much lighting up the tape that is super duper exciting, unlike last week where we had some interesting names lighting up the tape like Ford. We're going to start it off with a really small one that I actually haven't really seen come across the tape before, and maybe some of you guys have followed it more than we have. It's Joe, or St. Joe Company. Ticker symbol is Joe, J-O-E. They closed today at $19.48, down 71 cents. And this is a really small Florida-based real estate developer, which is probably why we haven't seen them come up on our screens before. And they saw a lot of unusual put activity going in today, probably because they have earnings coming up tomorrow, and a lot of bears are taking a spec on that. A lot of the effort seems to be, of course, with earnings. It's interesting that the activity is focusing in the Jan expiration month. They're lighting up on the Jan 21 puts. About 8,000 of those went up today, over 80% on the offers. People are lifting offers in the Jan 21 puts. We saw total put activity today of about 17,000 contracts, which alone is about 10 times Joe's average daily volume. And we only saw about 2,500 calls going up. Not surprising, vol on those strikes gapped up about 10% today. Mm-hmm. Most of this seems to be driven by the fact that this real estate developer's shares are down about 20% over the past couple of days after some analysts pretty much chopped them down at the knees. And with earnings tomorrow, it looks like the bears are coming out to play. For some reason, they are picking up the Jan puts. I guess Jan's looking like a better bargain.
Yeah, I'm looking at the Jan now, and the vol, even with the buying today, the vol's still several points cheaper than it is in the November and the December. Plus, the Jan allows you kind of more time and more cushion to be a little bit wrong. So I think it was a value play. Everybody, because we did see a little buying in November and December, but you're right, the bulk was in January, and yeah, value play.
Yeah, that's usually what you're seeing when you see people focusing on farther off months going into earnings. They also probably think that this downward trend is going to continue beyond just the November expiration, and they want to be able to play on that drop as well. And obviously the people have bid up the no vol to a point where it's much better to play in Jan right now. And then moving on to some other quick hits, we have Ambac Financial, ABK. This is another one that came up on our unusual activity measure just because their overall volume ran at about 2.5 times their average daily volume today. About 50,000 contracts went up with calls a little bit outnumbering puts on the day. The same thing can be said of Nucor, N-U-E. This is another one that saw some unusual activity today, about 2.5 times usual volume today, so not as large as what the jump we saw in Joe. But they saw about 31,000 contracts going up with calls, about 90% of the volume out there. So people heavy in the call strikes across the board out there in Nucor as well. And then closing up the quick hits, we have another little name today, Baker Hughes, BHI. and their volume was about twice their typical norm. We saw about 27,000 contracts going up, with calls accounting for about 80% of that overall activity. So calls active in Nucor and Baker Hughes with about 2.5 times the overall volume for each. These are not big names, so I don't expect you guys to be active in any of them, but every once in a while Sebastian surprises us by saying that was one of the names in his pit.
Yeah, no, that Nucor, it's interesting. It's not a big name, but that line in particular, my guess is the no 40s were a close, and the guy was rolling his position out to December. Because there's open interest on one line in November, and it's the no 40s. They're open on about 40,000 of them. And, that's my best guess, is that he's starting to close down part of the position and roll out at kind of a cash neutral out to December. And, he's obviously just kind of a bull. He's either has a big short position, but based on how this guy traded, where he kind of did it dollar neutral, I'm guessing it's a straight bull play.
Yeah, it looks like about 17,000 of these no 40s went up today.
And then another, and 8,700 of the
of these 40. So yeah, he was probably, looks like he was rolling them out.
Dollar, kind of dollar neutral rollout. AMBAC, it's a 40-cent stock. I mean, I can't buy a pack of baseball cards for AMBAC, Like, Garbage Pail Kids are more expensive than AMBAC stock,
It would be surprising to hear a reference beyond, like, 1987 from you. Do they still make Garbage Pail Kids?
No, that was probably right around 1985. So, I mean, AMBAC, it looked like a bunch of put sellers, probably some people taking some short bets that they're not going to go out of business, but, that company proved that basically they were borderline meaningless in they were a bond insurer that basically is just going out of business because they did a really poor job of insuring bonds. And then, what was the last one you were looking at?
Last one we had was Baker Hughes, BHI, another little name.
BHI. I traded DHI, but not BHI.
Wouldn't surprise me. You had some silly names in that pit you were in. Where were you, like the back corner of the floor? What pit were you
I was in a couple of different ones. I was at Motors, which had like some really interesting ones, and then I was over in Best Buy, which had a few other ones.
Okay, yeah.
So we'd be moving around, and it's interesting that you're trading Best Buy, Wendy's, and American Airlines.
Because those go together very well.
Yeah, no, it made a ton of sense. Most of the November volume looked like it was closing paper. The company had earnings this morning, according to what I'm looking at.
Yeah, they went up this morning before the open. Yeah, and MBAC has them on the 3rd.
So
earnings paper as well.
Yeah, these are people closing the paper because the stock was up about $2 today. It looks like somebody came in, closed up a couple things, and then some probably rolling out in Dec Jan. So, some interesting little ones. As far as any of these other ones, who knows?
You said you were watching one or two as well. Was it AON?
Yeah, A123 is one, A123 Systems Inc. A1. When I saw him on my list, I was immediately thinking that it was the people that make the delicious steak sauce. And it turned out
you got to be bullish on A1 steaks.
Oh, I am bullish. Oh my gosh, I was buying it with two hands. Back on the days when they used the hand signals, if you were trying to do with one arm, that meant you were kind of trying to do. If you had both your arms up and you were just saying bring it, bring it, bring it, that means you wanted to buy with two. You wanted to buy a ton. So, yeah, A123 is a ion lithium battery manufacturer and developer. They work with primarily Ford and Chrysler, and they're located in Massachusetts, but I believe they've got some they're one of those companies involved with the shockingly the Michigan redevelopment but it's still a car part. So they've got something going on there. They've got earnings on the 9th, and we saw a lot of buyers in relative terms on the November 11s and the December 12s. So that was one I thought was kind of interesting.
Yeah, it looks like Nova 11s went up about 4,700 times.
Yeah.
D12 was about 1,400 times. I'm looking through the time and sales now. I don't see any massive single trades that lit that up.
No.
There's a lot of
small
paper that just
through the system.
activated.
That's probably good execution, is what that is. So instead of showing their whole hand, they were slowly buying up as much as they could, because it looks like they didn't want to pay more than 20 or 30 cents for those calls. I think 30 cents with the trading around 10 was about the high we saw, and it didn't look like they were trying to buy it they were willing to buy it for any higher than that. So I think it was actually one customer that was buying it over time, if I had a bet.
Yeah, this guy, he has some room to play here because this is obviously not a penny pilot name, so they got some room to wiggle. These are nickel wide markets out here on these Nova 11s. So yeah, he could probably sit there and work small lots. Of course, in a name like this, it doesn't do that much volume. It takes some doing to get all that off and in small lots.
Yeah, no kidding. No kidding.
Hey Rob, was that you at Options Express lighting up this tape today? Was that you doing 50 lots at a time in this A123?
Well, like Mark, I thought it was the steak sauce, so I was buying up with two arms.
Yeah. We can all tell you what. You know what? Let's all go to Gibson's after we're done here, and we'll all go get some steak, or restaurant of Options Express's choosing.
Since they were footing the bill, why not?
Right.
That was part of the contract. I'm not sure if you saw that, but it was a weekly steak dinner at the restaurant of our choosing.
I believe the correct term is a weekly staking. So we get either we go out for a big steak, or if Options Express so chooses, they may grill us steaks on premises. That was my understanding. They
say Grigas is quite the master chef at the barbecue there, so I've heard his brisket is to die for.
Yeah, he does love his steaks, but I think this is going on Grigas' card. I think we're going to have to go down to Gibson's, take full advantage of it.
That sounds good. All right, and with that very hungry note, we will close out the odd block today, and we will dive right into the Express/spread block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express/spread block. This is the segment of the show where we talk to Rob or Tim or John, and we see what's going on over in Options Express land, what the customers are up to, what activity they're seeing, what are some of the inquiries they're receiving from their users. So, Rob, what is on the collective OX mind today?
Well, I think we hit on this earlier. For an election week, for a Fed week, it is very subdued. We haven't really seen a lot of trading from the big name companies. I can't remember taking more than maybe a handful of Apple orders today. So your Apples, your Googles, and all those bigger name companies are kind of on the back burner. One company that kind of jumped out, they kind of started looking into it after we saw some customer orders go through, is XCO, and that's an oil exploration company, and I guess the CEO is trying to take that private And on those rumors, we're seeing a huge spike in the stock volume, as well as the option volume. The stocks traded as of probably about 15 minutes before we started taping, traded 46 million shares today, which is a big jump in volume.
Yeah, I'm looking at the options right now. They did looks like 13 or 14 times their average daily volume as well. They did about 20,000 calls, about 4,000 puts.
This is actually one that came up on our Dragon screener where we had a big change in option volume. This was it was first page. It was probably about 15th down the list of and a lot of times you see these big changes in option volumes, and they're really not very large volumes. But this is one that actually did. We had about 21,000, 22,000 contracts traded today. So that was certainly a big spike. An interesting one that seems to come up, and I think it's purely a volatility play, is VVUS, Vivus.
Oh yeah.
And they're a pharmaceutical company, and they're the biotech, and their implied volatility tends to range anywhere from 50 to the 300. I think at one time before an FDA announcement spiked up to 800 on the IV.
Well, I think don't they have a couple of big announcements, or they've got 2 drugs that are having problems but are still in development and could still really, come to play. This stock reeks of Denadron all over it. Not that it actually is going to be owned by Denadron, but that kind of up-down, swinging, massive volatility where, as this thing heats up, it could just fly around. And, it's a really interesting little stock.
Yeah, and we get a lot of our more sophisticated and complex traders will do a lot of conversions, like reverse conversions with these stocks. Sell a lot of that put premium because it's such a hard borrow because it's not a very actively traded stock. Oftentimes you'll see the put premiums get really inflated. So you'll see some selling of deep in the money calls, deep in the money puts, and just trying to suck that option premium out of it before expiration. But so we're kind of surprised to see a stock like that. It comes in waves. Like you won't hear about Vivus for a few months, and then they're pending an announcement, and then the volatility will just spike up. Actually, they had a huge drop in vol today. Their vols dropped from 216 to 84.
They have earnings right now, apparently, after the close here.
It was off about 10% during the day. And, that's the neat thing. One thing about hard borrows that's interesting is that the market's not always right. People think these hard borrows always end up doing bad, and it's just not the case. Take, one example that comes to mind is something like a Joseph A. Banks. Okay, this stock was extremely hard to borrow for the longest time, and is higher than where it was when it was at its most difficult time to sell. So if you actually like a stock and then you find out it's hard to borrow, you can get paid a pretty hefty penny to be long. It can be very advantageous to you. There are actually a lot of cool things that customers can do with hard to borrow stocks. And that's something that I think a lot of people, a lot of times miss. And it's one of those things that if you really like a stock, there's some great things about options that can make them, really advantageous to the trader. So,
synthetic longs are really popular. First Solar's been on the hard to borrow list for ages, and that stock just keeps on trucking.
Mm-hmm.
Might be a good strategy block down the road. Then is discussing the conversion reversals and using them to leg into stock, especially stocks that are hard to borrow.
Will do.
I'm looking at this volume right now while we're talking in this Vivus, and yeah, it is all looks like a lot of conversion reversals went up because it's all pretty much equal on the no 7 strike across the board and the no 6 strike across the board. So a lot of people leaning on those puts, I guess, to get some stock in there. And it looks like an interesting one as well. They had a pretty big spike up a couple of days ago. They gapped up from like $6 up to like
8:30. Yeah, unbelievable.
So they had some announcement the other day. I'm not sure what it was. That prior to earnings are right now. So stock's not moving at all. So
it's a lot of their drug stuff. I don't even think the earnings really matter on this sucker.
Yeah, a name like this, it's all about external factors like approvals and that sort of thing.
Mm-hmm.
Earnings are kind of moot till you get the green light from the FDA.
Mm-hmm.
What else is going on the OX ticker there, Rob?
Well, we're seeing actually mixed signals going into the FOMC from the bond market and from certain commodities like oil. We're seeing the oil market and a lot of the commodity traders are expecting the Fed to really kind of key on deflation. It seems like they're so preoccupied with deflation that they're once economic conditions turn, I think that the inflation is just around the corner. It could be pretty vicious. So we saw the move up in oil, and surprisingly, the bond market is kind of trading right around support. December bond futures are right around 130, and traders have been trying to short bonds for ages, and it's amazing that the shift in attitude is almost like traders are cautiously optimistic that the Fed is going to bring up deflation and talk about maybe buying back some more assets, but at the same token they don't want to get too long, and we're seeing a little option volume come in on the put side. People that have been long are kind of hedging their positions and hoping that we don't break through 130 here.
You see a lot of fixed income players coming into Options Express these days?
Bond futures have always been really popular. They move really good, so that they suit the day trader. They're a really good hedge if you have a portfolio. Say you don't want to necessarily be long treasuries and actual cash treasuries and get stuck getting paid very minuscule premiums. A lot of traders will buy futures to complement their stock portfolio. That way, they can simply exit the position if they think that the equity market is about to make another push higher. And it's much easier to work the bond futures than it is to work the actual Treasury cash market and constantly be in and out of those 3-day settlements.
Diversity of things going on at Options Express today.
Mm-hmm.
Yeah, I got a lot of little names, got some fixed income stuff going on, a lot of interesting stuff, Rob.
Other than that, it's been kind of a really subdued session. I mean, I don't think other than the stocks I mentioned, Vivus and XCO, we've had just you could throw a dartboard up there and with a bunch of different ticker symbols. People are kind of just trading a little bit of everything, and even your big players have been very quiet.
Yeah, that's kind of what we're seeing here too. It wasn't the most exciting day to watch. Like I said, a lot of people are playing wait and see with the big stuff coming out tomorrow. All right, and with that, we will close out the Express/spread block, and we will dive right into the strategy block.
The strategy block.
Welcome to the strategy block, and this is the segment of the show where we discuss an interesting option strategy or just a general trading strategy that might be particularly relevant to the current market conditions. Our special guest host for the strategy block is usually Mr. Tusaw, Uncle Mike, as we like to call him. Uncle Mike, what do you have on the docket for today's strategy block?
Well, Mark, oftentimes I've had questions from a lot of people in terms of like ways with which you not necessarily are trying to predict the market or trying to guess the right entry point or exit point, but you have a sentiment on one stock versus the other. Home Depot versus Lowe's, for example. Or what we'll do today is my 2 all-time favorite stocks, XYZ stock versus ABC stock. And let's say, for example, that you believe that XYZ stock is just a stock that is just so much better than ABC. ABC stinks, they're horrible, and the stocks are very similar in terms of the share price, the market cap, the customer volumes, pretty much down the road or across the board, very similar in all facets. And you really believe that XYZ stock is going to outperform ABC stock. Well, this would be something known as pairing. And I want to keep it pretty simple for today, at least in the initial talk on pairing, so to speak, as a ways with which you can trade the sentiment. The simplest way of doing XYZ versus ABC would be to buy deep in the money calls on XYZ stock and buy deep in the money puts on ABC stock. So let's say, for example, that the stock market itself does really well and your calls will do well, and let's say that both of the stocks go higher, you're saying, or your bet, so to speak, is that XYZ stock is going to outperform it. So the calls that you purchased will outperform the puts that you purchased, should both of them go higher, because of the fact, and this is assuming you're right, because of the fact that you're picking the better of the two, so to speak. Now, let's say that we have a down market and both stocks are going down. Then theoretically, the worst of the two stocks, ABC stock in this case, will go down lower, so the put that you bought will outperform the call that you're losing money on. Now, that's just a very simplistic example of deep in the money cross-stock pairing. Another way with which you can do it between stocks would be to use volatility as a skew, so to speak. Let's say that you believe that XYZ and ABC are just identical companies, and you believe that the volatility across the board on XYZ stock is much higher than the volatility on ABC stock. Well, if that's the case, if you want to be fairly bold, so to speak, you can sell a straddle on XYZ and buy a straddle on ABC stock. So that way you're long vol on one and you're short vol on the other. And you're saying that volatility is going to move accordingly between the two of them. And keep in mind, there's risk to the fact that they could both move exactly the same either way. That's the risk you're taking on as a trader. Now, one thing that we like to do a lot of at Know Your Options is we like to do pairing versus the market, so to speak. If we believe that a stock or if we believe that an index or something along, or I'm sorry, a sector will outperform the market, a lot of times what we'll like to do is set up either baskets of stocks, sectors that are overweighted or underweighted or something along those lines, and we'll just buy the underlyings or buy an ETF that tracks the sector, and we will hedge it with either options or futures. And at times we've used levered ETFs, but it's probably not our regular course of business to do so, just because of the fact that you have to readjust the things far too often. But with that, if you have a sentiment on something that's going to outperform something else, whether it is Apple versus the market or energy stocks versus the market, or whatever the case may be, you have the ability to set up a trade based upon your exact sentiment, which once again shows the flexibility and beauty of options.
Very eloquent, very well done.
Wow.
Once again, you have used my favorite stock in the world, XYZ. It's amazing how versatile that stock is and how many situations you can use.
It does exactly what you want it to do. It's been my favorite stock forever. But I got to tell you,
how is it a volatile growth stock that also pays a 10% dividend yield? Explain that.
It's amazing. I'm putting my kid through college on XYZ stock. I'm telling you, it's amazing. It's a stock for all seasons.
I like it.
And you could be long and short it too, and it still makes money magically.
That's unbelievable.
And with that, we will close out the strategy block, and we will dive right into Around the Block.
Around the Block.
And and welcome to Around the Block. This is the segment of the show where we discuss what's on everyone's minds for the next couple of sessions, and I don't think it takes a genius to guess what's on everyone's mind right now for the immediate next trading session. Everyone's looking at the outcome of the election tomorrow and how that looks. I know, Mark, we were joking before the show about bets that, that would do well if the Republicans take it. I'm kind of curious, too. I mean, that's kind of the conventional wisdom right now, that the Republicans are going to sweep back and take back both houses. I wonder, what do you guys think the market will do if we don't see that? We see the Dems retain control. Will the market rally, which would be kind of odd, rallying on the Dem takeover? Will we drop because we won't have the anticipated gridlock everyone's looking for? What do you guys think happens if the expectation does not come to pass?
I'm of the school of thought that if the Democrats do pull it out and win and they take it over, I think that we will have a pullback. And I'm not trying to get political by any means here. It's the last thing I want to do. But with that, I think it's just because of the fact that gridlock is something that the talk in the media these days is that we're going to get gridlock, and that's a bullish sign for the stock market. And if the Democrats do end up winning and retaining both houses, then with that, the rally that we've had, I think, is priced in with a Republican victory, and I think that the market will be disappointed on that, so to speak. And that's my 2 cents on that.
I couldn't agree more. That's why I'm actually paying attention to the disputed border between Myanmar and Laos. I think that the heavy negotiation between the two prime ministers in the Southeast Asian countries, that could really drive curry and Asian spice prices through the roof this week, and that's actually what I'm paying attention to around the block. I just made that up. No, Mike, I actually, tell you the truth, couldn't set it better myself. I think if we end up with not a form of gridlock, we will get a big pullback. Now, if the Republicans actually end up getting the Senate and the House, which I don't think the market is really pricing in right now. I think they're pricing in Republicans picking up the House and not getting the Senate. I think there might be a little more upside. Maybe not a lot, but I don't know. Another 2, 3, 4%. We could definitely test the highs that we saw in March or April if something like that happened.
It is interesting to see how the fundamentals have kind of shifted. I'm not sure. I was on the floor back in the whole craziness of Bush-Gore, and Mark, maybe you were as well. And if you remember those days, it was insane. It was, the second it looked like the Republicans were going to take the White House, the market rallied. Second looked like it was going to be Gore again, the market dropped until the end when it kind of people just wanted it to be over regardless of who won. But, now we have the same kind of movements, but for completely different reasons. I think the old days of, Dems bad, Republicans good for the economy has kind of gone out the window. And Now people just want people at loggerheads, and that's a good thing. And if we get that, then we rally. If we don't, we crash. And it's kind of an interesting thing to see. It's the same movements of the same parties, but completely different reasoning behind why that works. And just hopefully we don't have any more repeats of that ridiculous Bush-Gore thing, because that was a good time from a volatility perspective to be on the floor, but it was also completely maddening to be just moving all over the place every single day for absolutely no real valid reason whatsoever, just pure rumor.
No, that happens.
Yeah, but do you realize all the jokes that Sebastian's going to have about hanging chads, though, if we do get that?
No thanks. If that happens, I'm moving to the Pitcairn Islands in the Pacific.
So no Canada for you. You're going way past that.
No, I'm going to the Pitcairn Islands. It's gonna be awesome.
Why don't you pick some disputed territory between like Hong Kong and China and just hang a few islands over there in the Pacific and hang out there?
Well, it's safe there at least. You got nothing to worry about there. And the disputed territory is always calm and relaxing, right? Isn't that what they say?
No better place to raise a child than in disputed international borders. In case you are a fundamentalist, obviously we have the FOMC coming up as well. And they are debating that QE2. I hate that acronym, QE2. Every time I see it, I think of the stupid ship. It's a silly acronym.
It sounds like something you'd hear in the song made up by the electric company.
See, I think of like Donald Duck's nephews, Huey, Dewey, and Louie, and then you got QE. He's like the fourth Donald Duck nephew.
On a brief aside, not that any of our asides are brief on the show, but on a brief aside for the electric company, my little guy watched that the other day, and I haven't seen that since I was a little guy watching the electric company, and wow, has that show changed. It is a completely different program than I remember from being a little kid, and it's...
They don't do the buy, sell. They don't do that whole thing anymore?
I didn't watch the whole thing, so I don't know. It was all like weird skits and rap and stuff. It was weird.
As long as they still have Morgan Freeman as Easy Reader, I'm sure it still maintains.
That's what I was looking for. I was looking for a little Morgan Freeman voiceover, because he voices over everything else on the planet these days, but nothing.
Yep.
He's too good to go back to his roots, I guess.
I guess.
But yeah, if you're still a bit of a fundamental player, there are some earnings this week. For all you options guys out there, SIBO is on the 4th, this Thursday. Ooh. Let me pull them up right now and see where they closed today. Closed at $23.59, so down about 42 cents. So they're up a little bit from their lows.
They announced a buyback at $24 a share. I think that is leading into them trying to sell themselves, if I had to bet.
I think they're trying to show some support. They don't want the stock dripping. I mean, it was threatening to go below 20 for a while there. They don't want this thing hitting the high teens, and then someone can come scoop them up on the cheap.
Yep, and which may end up happening anyway. I'll be real interested to see.
Yeah, I mean, if you own SIBO stock right now, you essentially own a very long-term call option on an acquisition. And everyone's leaning towards, probably CME, maybe NYSE, but probably CME.
Everything I'm hearing is that the CME is, although you never know, ICE could come in and want to cause problems.
That's all they want to do. They want to cause problems. They have no intention of owning any of this stuff. They love the they get.
I think ICE and SIBO would actually probably be a decent mix. With the equity commodity mix. I mean, and the all electronic platform of the ICE might be interesting.
I don't know, OTC energy products and SIBO as listed products might be interesting. They have a history. Obviously, they worked together during that whole CME free-for-all with the Board of Trade.
Yeah, I know. Yeah.
I remember I happened to be down there at the FIA show a couple of years ago when the ICE announced that deal. And it was right on the morning I was going into Board of Trade breakfast, and talk about just the chaos erupting. These guys thought they had the deal done, and then all of a sudden this ICE comes out of nowhere and overturns the apple cart. And they seem to love, I think, a lot of the attention that brought them. So maybe I wouldn't be surprised seeing them throwing their hat into doing it again. Whether they actually can outbid the 800-pound gorilla in the room, which is the CME, I would be surprised.
Yeah. Well, but the difference is, I think that the Board of Trade was a far more desirable purchase than the CBOE, right? I mean, seriously.
Yeah, definitely. They're still a monopoly, so at the end of the day, monopoly is more desirable than a semi-monopoly with a lot of hardcore competitors.
Yeah, I mean, if you're buying CBOE, the only real asset you're buying is the 10-year rights to SPX and the VIX products. Beyond that, it's just a bunch of paying for order flow that you're not making very much money off of. So,
really, it is a handful of products now. I mean, if anyone has been down to the SIBO floor in recent years, it's a kind of a depressing place.
There's tumbleweeds.
Yeah.
Well, there's more tumbleweeds than there are traders.
Yeah, I mean, everyone's in SPX and a few other pits like VIX, and that's really about it. So it's definitely changed from the good/bad old days. But yeah, SIBO on the horizon for Thursday. Should be interesting to see if they have any interesting stuff to come out with there. Maybe they'll fill in some more information on when or if they can ever make electronic SPX happen. And then also for earnings, it's if you're a video gamer, this is the week for you. Activision and Electronic Arts are both announcing earnings this week. So to keep our tech quotient alive for the week, we'll throw those two names into the mix as well. And that's about all it seems interesting on the calendar for me. I know you guys, anything else besides the stuff, all the myriad things we just discussed?
Nope, that'd be it.
All right, that will bring a close to this episode of the Option Block. We came in at almost exactly an hour this time. Wow, amazing.
I know, it was
well done, guys. Well done indeed. I want to thank everyone for downloading and streaming the show. Of course, if you want to learn more about Uncle Mike's strategies for stock and option pairing, then by all means, swing on over to Know Your Options, Inc. Don't forget the INC at the end. Know Your Options, that's a hardcore porn site. You don't want to go there. And KnowYourOptionsInc.com. And you can learn more about what he's up to there. Mr. Sebastian can be found at optionpit.com, as well as greasymeatball.com. And what was the other one we had for you? Dirty Naked Option, something along those lines?
Something, yeah, well, yeah. My gosh. Just stick to Option Pit, folks. Stick to Option.
And then, of course, Rob and the rest of his cohorts, Tim and John, can be found at optionsexpress.com. If you want that personal degree of service, that personal attention, then be sure to ask for Rob. He's the man to talk to. Tell him Mark sent you. He'll give you the special rate. And and of course, if you want to learn any more about the activity or in the news or information we have going on, you can find it all at theoptionsinsider.com. And thanks again for listening and streaming the show, and we will see you next time.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated, all rights reserved.